All right. Hey, everyone. Let me set this up right. All right. You guys should be able to hear me okay. All right, cool. Hey, everyone. Mark here, Mark P Markets. Thank you very much for joining me for another Bitcoin analysis session. If you're new here, let me explain how this works. So first thing I'm going to do is I'm going to go over the economic calendar. Hopefully you guys are in the habit of checking that. Second, I'm going to go over the Bitcoin analysis and talk about any other examples and things, perhaps the trade scanner, if there's something to talk about there. And then third, I'm going to answer your questions about a stock or an altcoin. So if you would like to ask a question, please put the question in the channel now. Now would be a good time with the stock symbol. If it's an altcoin, please make sure to put USD or USDT after the symbol. All right, so I get the symbol correct. Now, let me just make a change over here real quick so I can see what's going on TradingView. I am simulcasting on TradingView. So TradingView people, all right, let me just make sure I can see you guys over there. All right, cool. So again, now would be a good time to be putting your questions in the channel. Now, I know this is not the sexiest title in the world, how to trade low volume markets, but that's what we're dealing with. And it's a very important issue that a lot of people don't bother to consider. And that's why I'm going over it. Again, a lot of the stuff that I do is not really sexy, or it's not really in demand, because people just want to be lied to. And I don't lie to people. I deliver reality, which I guess is not a very good business strategy. Anyway, all right. So with all that said, let's get this thing started, shall we? Let me pull up my slide here. Just give me a second and we'll get going. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Hey, Steen, it's good to see you. By the way, if you want to share what country or what city you are from, that's always a fun fact. I am streaming from the greater New York City area, also known as Northern New Jersey. So that explains why I use funny words sometimes for things. Okay, I know that joke is getting old. I have to come up with new material. I don't get paid for my jokes, right, Steen? Anyway, all right. So, yeah. So, all right. So let's get started. First things first. Let me ask you guys. Have you guys looked at the economic calendar? There is one on TradingView. By the way, I wrote an article yesterday on TradingView, which I don't know, I know a lot of people are away right now, so maybe that's why the numbers were low, or maybe just no one's interested. I don't know. But I wrote an article. Oh, okay. Okay, cool. Thanks for letting me know, Kutak. Okay, maybe you need to refresh your browser or something. All right, maybe if my sound sounds strange, you might want to refresh the browser, because my sound check earlier looked good and all that stuff, and Steam is not having a problem. So you might want to, it could be your connection, maybe refresh the browser. Okay, maybe that'll help. Anyway, thank you for letting me know. So economic calendar. I was saying TradingView has its own economic calendar. I wrote my article on there yesterday. I hope you read the article, because a lot of times in that article, I basically review a number of the points that I made in that article on this stream. Okay. Again, I expect this to be kind of slow. We are right in the middle of the summer. People go away. All right. And that's for good reason. The markets aren't really a good place to be during times like this. Right. And that's one of the points that I want to make. Hey, okay, cool. Hey, Peter, good to see you. All right, over there on TradingView. All right, guys, so let's go over. Oh, from Poland. All right, Brian, good. Welcome. Good to see you. All right, I think you're my first guy from Poland. Okay, so anyway, so people, let's go over the economic calendar first. Every Monday, today is Monday, you should always check your economic calendar, just to be in the habit of, especially if you're involved in Forex pairs. If you're involved in an index, you should check the economic calendar, because there can be some important scheduled economic events. These are important not for trades. These are important to mitigate risk, because you do not want to be taking new positions or putting on bigger positions going into some of these reports, because their outcomes are completely random. I mean, not the outcome of the report itself may be somewhat forecastable. You say, well, of course, inflation is going to be going lower or whatever. You can make all those fundamental arguments you want, but how the market reacts to that information is not something that is forecastable. because the market may interpret it another way and not react in a logical way. Markets are not logical. Okay, I was just talking to someone the other day who was explaining to me something about how he uses mainstream news as a source of information. I said, man, if you want to set yourself up for failure, that's the perfect source of information because it gets you caught up in the herd mentality. You need to be able to think outside of that if you want to get anywhere in this business, whether it's a day trade, swing trade, or even as an investor. You have to be able to think outside of the herd mentality. One of the problems in this environment, especially with the way the Nasdaq and S&P are going, and I'll go over those charts real quick if you want me to. This lulls a lot of people into thinking that things are okay right now. It's safe. It's a good time to invest. It's not. This is the absolute worst. And you can say, how could you say that? The S&P is on the ties. Right. The higher it goes, the greater the risk. You can't see the risk, okay, or the risk potential. You have to understand it. It's not obvious. You have to take your Captain Obvious hat off. The higher these markets go, these slow grind markets, the greater the risk. I could have made this argument back in April, which I was saying the markets are too risky. They're too risky, and we're a lot higher than we were in April. And you can criticize me and say, well, you were wrong. Hey, I am wrong at times, definitely. But the thing is, the risk is still increasing. It's not improving. So here's the other thing about that, and then we'll get into the calendar in a moment. But here's an important thing about what I just said, because people make this mistake all the time. They buy the breakout. The breakout pays them. So let's say you bought in April or May. Okay, let's say you bought the S&P and it's higher now. You say, see, look, you just go with the flow and it works. That same behavior will cost you all of your money when this market turns, because the potential is greater on the risk side. There's greater risk here. We are not at support levels. We are not at cycle lows. These are bad places to get involved in terms of long-term thinking. That's why I encourage people, small or stay out, okay? Day trade. Anyway, all right, so that's really like one of the main points that I want to make here today. Let's talk about that economic calendar, shall we? So who here, instead of me just reiterating it to you, I want you to get into the habit of looking at it so that you understand what is important and what is not. So I want you guys to tell me, what do we have on the economic calendar this week? Anyone want to tell me what you guys think are important? And don't feel weird about giving me a wrong answer. I'm not gonna make fun of you or anything. You have to go through this exercise so that you get an idea of what really carries weight and what does not. So if you put something in the chat that does not carry weight, I will let you know, so that next time you will know not to worry about that information, right? That's why we go through this exercise. So anything on the calendar, anything. So Stian says not much. Okay. So tell me then. Tell me, Stian, give me some of the things on the calendar, and give me the date, the time, the timestamp, and what it is, if you can, or whoever else. Doesn't have to be Stian. Anyone else who wants to let me know what's on the economic calendar, and let's look at it together. By the way, Stian has been working very hard on this, on the trade scanner robot that he's putting together. And what this robot will be able to do once it's working properly is it will track the trades that come out in the trade scanner. So, and it puts them on a spreadsheet. Now, he's still working on it, but we should all thank Stian for this work, because this allows us to see the actual performance. And the stop and take profit orders that this thing is using is based on the ATR method that I've taught previously. So it's going to be some very valuable information that I'm going to share with everyone once it's available. So again, thank you, Stian, for that, because he's just helping me out with that. And I really appreciate that very much. I'm not a developer. I'm not a coder myself. So anyway, okay, what do we got here? Euro inflation, Kai says. Okay, not important. All right, anything else? Is that it? We don't have any. So for the new people out there, what you should be looking for on the economic calendar, I'm going to point it out because I obviously we don't have any of these reports this week. You should be looking for non-farm payrolls, which is the first Friday of every month. You should be looking for any testimony from chair. You should be looking for any kind of interest announcements from the U.S. Okay, that's what you want to focus on. You know, now other countries, of course, have their interest rate announcements. You know, European Union, right now, none of them are going to be as important as the U.S. Okay, my connection is a little funky here. I may cut in and out. Okay, so if I do just refresh your browser, I'm just seeing here that my connection's getting funky. It's this weather. This weather and my internet connection is just not a good combination. Anyway, so those are the main reports that you want to look for. Okay, and if those reports are not on the list this week, then everything else that is there is not that important. It's not really market moving. All right. Also, you should keep an eye on quarterly reports for certain stocks. Sometimes they can have an effect on some of the S&P or the NASDAQ, but again, major stocks, Microsoft, Amazon, Google, those type stocks. If it's some little biotech stock that no one's ever heard of, you don't have to worry about that quarterly report, unless, of course, you're in the stock. All right. By the way, speaking of quarterly reports, my trade scanner has 2 channels. All right. By the way, just real quick, what is that, and why do I keep talking about it? The trade scanner is a screener, right, that I put together. And when my criteria is met, it sends text notifications into 2 channels on my Discord server, my community. My community is free, by the way. You can check the link in the description. You should join it. I have some valuable resources there, and I have some new things coming soon, even for free members. But the trade scanner is available to premium members, and it produces text notifications for trade ideas. It's a great source of trades, especially for the coins, because it calls a lot of ideas that we would otherwise miss, because it's based on it's a trend-based momentum reversal system. It's never going to call counter trend trades. All right. It's programmed to only look for with the trend trades. Now, they don't all work out. And again, that's why we're going to start tracking it, so we can actually come up with hard statistics, and I can give you an actual win rate when we can see what it is. Okay. Now, here's the other thing I have to say about win rates. Win rates will fluctuate based on the environment, right? In some environments, the win rate will be better than in other environments. That's an important thing, because your win rate may not be the same as the robot's win rate. You can improve your win rate because you can do things that the robot cannot do. All right. My robot is not programmed to do certain things, like raise the stop at a particular point. If you're moving your stop to break even at particular points in the trade, your chances of a more favorable outcome increase, right? The robot, I can't do that with the robot. I'm not that sophisticated, but you can do that if you know how to judge the situation properly. And that's something I usually go over in my student meetings. We talk about context and judging these trade setups that it comes up with, because you don't take them blindly. It's not a set and forget thing. You do have to apply some judgment. That's very important. Again, if you'd like to know more about that, there's a link in the description. And by the way, speaking of the link in the description, do me a favor, people. If you like the stream, press the like button, press the boost button on TradingView. Subscribe to my YouTube channel. I do have content on the way. I know I've been saying that for a while, but I don't have a lot of time to work on it. So it's a very slow process. But the more you can help me promote my material, the better for everyone, because then I can actually produce more resources for the community. And that's what we need. Anyway, all right, people. So let's move along. So we got the economic calendar figured out. Talk to you about the trade scanner. I mean, there was some interesting trades. Stian, if you want to put the trade signal, why you should, okay, yeah, if you want to put the, Stian, do me a favor, put the trade signal in the channel, and we'll take a look at that. Okay. We'll take a look at that. It's a good question. So let's now get into this Bitcoin situation a bit here, right? Let's talk about this. Now, the title of today's stream, of course, is how to trade low volume markets. Now, as we can see, Bitcoin is starting to move a bit here, right? When I say low volume market, I'm not talking about you pull up the volume. Notice I don't have a volume histogram on my charts. So you don't sit there and say, well, how is it low volume when, there's a big green candle on the volume histogram? That's not what I'm talking about. I'm using it in a general sense. So low volume in general, this time of year, summertime here in the US, is particularly low volume. All right. The behavior changes. And that's why things may seem tedious. They may seem like nothing ever changes, right? It's because we have lower participation. Usually the big guys go away, right? They're not active in the markets. So often it's from May all the way until October. Now, it's not like volume goes to a certain level and just sits there. It sort of from May till about now, or until about August, volume just basically gets lower and lower and lower and lower. Volume is usually its worst in August. It doesn't mean that there won't be movements. It won't mean, sometimes you have some spikes here and there based on some news, but general volume stinks. That's why you see ranges consolidate. That's why you don't see much action. There's not a lot of general participation. Okay. It's a seasonal thing. Now, it goes into August, and then from August, it eventually and slowly starts to pick up until October. By third or fourth week of October, that's usually when volume is back to the type of action that we like to see. When I say action, I mean movements. We touch highs, we pull back to good lows. There's opportunities for day traders and swing traders in that type of environment. This environment, slow grind environments, I suggest day trade. So let's talk a little bit about that here real quick. Because again, how to trade low volume environments. When I talk about day trade, what day trade means is it means small expectations is what that means. Because as a day trader, whether you're right or wrong, you should be out the same day. So that means your greater magnitude risk is mitigated. You should not be buying this thing, right? As a day trader up at 31K, for example. I'm just going to use Bitcoin as an example here before I get into that Bitcoin analysis. You should not be buying at the 31K breakout and still be in this thing. You should have been stopped out days ago, right? If you had done something like that. If you are not stopped out, you are taking the most risk. And this thing is now testing supports. So that's what I mean by low expectation. In a day trade, your stop should generally be tighter or proportional to the time frame you're working on. When you day trade, you're not using a daily chart. You should be using a 30-minute chart, perhaps a 1-hour chart, perhaps a 4-hour chart. You can go smaller. You can do 15-minute, 5-minute, but that becomes really advanced and not something that I would recommend for beginners, but it can be done, okay? To kind of give you an idea. I'm gonna turn off this thing over here. We don't need to see the ATR right now. So let me make this chart bigger so you guys can see it also. All right. Oh, wrong button. There we go. Okay. So, and Alex, hey, cool. Good to see you. Yeah, we'll take a look at that. Alex, by the way, is putting some great charts in the student channels of my server. He's one of my most. I mean, he recently joined the community. He's been following me a long time, but he recently joined as a student. Nice job, man. Nice job on your work. He gets it. If you want to learn how to get the most out of my training, just follow his example. All right. Anyway, so here's the thing with this Bitcoin situation. Now, I'm talking about day trades, and I'm talking about keeping your expectations low. Your stop and your take profit should be proportional to the time frame that you intend to work on, and you respect those levels. Now, you're not going to make a lot of money, but if you're looking for big moves, you should not expect them on the day trade time frame. That means you're looking for swing trades. Swing trades on the long side are a bad idea at 31K because that's a very clear-cut resistance. In fact, all of my guys were selling when they had their Bitcoin. There was a few Bitcoin longs that were called up here by the trade scanner, and these guys were taking their profits in this area. My students were taking their profits, okay, from mindless sheep who don't know any better and listen to their favorite fraud and are buying this right here, 31K. Horrible place to buy. Now, let's get into Bitcoin now. Since I'm on that, let me segue right into it here. This move on Bitcoin, this move right here, you see this? That move, by the way, I saw that was I think that was the XRP news, and I saw some garbage titles on YouTube. Oh, Bitcoin is surging on blah, 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 blah. Most likely that was here, okay? Surging, huh? I hope you were not one of those who got sucked into that move right there. This move right here, okay, this green candle that I'm pointing out, that should have been the breakout candle. Often, and I wrote about this 2 weeks ago on TradingView, when you have a lingering at a resistance level, that's often a sign of strength. It doesn't guarantee a sign of strength, but it's often, you can basically take that as a sign of strength. At some point soon, usually the third attempt, sometimes the fourth attempt, right, there should be a breakout. Now, what often happens in that breakout is all these morons who short this over here in this area, they get caught and they get squeezed. On top of all the breakout buyers jumping in, it usually pushes the market up to the next resistance. That's the process of order flow, and it happens over and over again, okay? Now, this third breakout should have been the one. Instead, we get this red candle. It's not an outside bar, but it's almost an outside bar. Let me make that bigger, okay? This big red candle right here. When you're going for a breakout, let's say you bought the day trade breakout, and that's the candle that you see forming next, that is not the right candle, all right? When you're getting a breakout, the next candle should have looked like this up here, all right? Even if it was a small candle, it should have been up there. It never even came close. So this is a daily chart. Let's just take a look at that on a 4-hour chart, which is on a smaller time frame what you'd be looking at, right? So again, you took that breakout, and these are the candles that you see after the breakout. Look at the bearish pin bar on the 4-hour chart. Why would you be long that? Why would you stay long that? That's a talk about red flag. You can't get any more red flag than that as far as being long. This is why if you took that day trade breakout, you should be out. And this is the result. People get caught and they get stuck in this thing, right? So that's what happens when you follow frauds. That is what happens when you think that, you've got some sort of magical blah, 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 and now you get caught. Now, sophisticated traders or more advanced traders will know to get out. I was not involved in this, but if I was in a day trade and I saw this, I would not be long. Okay, if anything, I would no longer be long. Now, let's talk about where we are now. All right, because again, the title of this thing is we're talking about how to trade in these low volume or uneventful markets. You want to look for smaller time frame trades. I would suggest the 4-hour chart is a good place to start, especially if you're new. Don't go smaller than that. The 4-hour chart is appropriate. Now, we are in a support level. All right, this area is a support level. As you can see on my chart, I have this blue square that's been here for a while. See this blue square over here? And that's the swing trade support zone. That is between what, like 28 even and 29 half. And as you can see, we bounce off of that all the time. We've been bouncing off of that for a while. What's today's low? 29,669. So we keep coming off of that. It's still an active support. It hasn't been compromised yet. But here's the thing. Like I was saying, this candle is not what we should have seen, which leads me to believe that there are a lot of people, longs, caught in this thing. Now, we haven't cleared the support yet, but I would not step in front of this because if this current candle closes weak, it's a bad idea to get involved because that means the buying that was occurring in this area has given up. Now, we don't know that yet. We have a tail developing on this 4-hour candle, but the candle is still open. The candle has to close. If the candle closes like this and the next candle gives us like a green inside bar, and you want to take the break of high of the green inside bar in this area, then that would be a valid day trade, possibly swing trade, but I would say it's more on the aggressive side for the swing trade. I'd prefer this zone in here for the swing trade. So I would treat this more of it as a day trade opportunity or a smaller time frame, lower expectation opportunity. The trade scanner most likely will call this long. Now, one thing I have to talk about, one thing I have to mention about the trade scanner, I notice it does this. It'll call like a trade, right? And then maybe in 4 or 8 or 12 hours, it'll call the same trade again, but at a much better price or sometimes a much worse price. And what's happening there is it's getting a signal, right? And it's faking out. It's basically what it's like a failed low. That's basically what's happening when you see like that double print where, it calls one price and then it calls it at a much better price, sometimes a much worse price. But when you see that better price, that second trade idea is higher probability because basically what it is it's a failed low or a failed high. All right. Anyway, that's for the people that have access to it. We'll go more over that over in the student meeting. The student meeting, by the way, will be next Wednesday for those of you that don't know. I sometimes open up the student meeting to some free members, but you really have to show me that you're interested. So if you'd like to get involved in that, you can come into my Discord community, send me a private message, let me know that you're interested, and I'll send you the invite if you'd like that. But again, it has to be people that are really into that because, a lot of people, I usually do it around this time, and a lot of people, it's not a convenient time for people. for a lot of people. So, if it is a convenient time for you and you're interested, let me know. I'll send you an invite on the server. Okay, I'll give you the link to it. Anyway, all right. So you guys follow me so far with this Bitcoin situation? So we are in an area of interest on the day trade time frame. You guys get that? But it's too early to take risk. So I gave you the setup idea. We want to see an inside bar and we want to see it close. That means the trade may not develop for another 8 to 12 hours, possibly. I mean, this thing has to develop first and then it has to close. And then the next candle has to come out, right? And then take out the high. It has to look kind of like that. When we have that situation in place, as the high is getting taken out, right? This is where the trade idea is often called here. That's what I try to go for anyway. Now, sometimes I make calls myself, but recently I've just had my hands full with stuff. So the trade scanner has been doing most of that work. But if I see something like this, I would be apt to call something like that. But what I'm doing, though, is I'm not calling the day trades. I'm calling the swing trades. So I'm using the daily chart. All right. What I'm describing here is a day trade. Hey, who is that? Noob trader. All right, cool. Thanks. 100 coins. Thanks so much. Hey, no problem. I'm glad you appreciate the video. I really appreciate the support. Thank you. Join my Discord community. You'll find a lot more value there as well. Okay, for free. Anyway, all right. So we're clear on that. So let's move here to the bigger picture, back to the bigger picture, and then I'm going to start getting to your questions. So again, that takes us back to this bigger picture situation, right? And these daily candles are very important. What I just showed you on the 4-hour pertains to day trades, not to be confused for swing trades. So I may get like a day trade signal to go long, like that inside bar that I just showed you, but it may not look like that on here on this time frame. It may look like something else. So you have to also keep that in mind. That's why the day trade has its own stop loss and its own take profit. The swing trade, like I said, I'd want to see something develop inside of this zone. What do I want to see develop in there? A bullish pin bar would be nice. Okay. Something where it tests the low, gets everyone out, pushes all the longs out who believe in nonsense and follow fake gurus. And then we get a bullish pin bar that looks kind of like this, right? Something like that, I would be very interested in seeing. That would be a swing trade long. Now, whether it works or not is another story, but a failed low area, often you have too many people shorting this when there's really no reason to be going short in a high probability support zone. So those are often great long situations. Now, because we're in the summer, we may not get the follow through that we want. So we don't sit there and put our take profit up here. Like, oh, it's going to go to 32K now because I'm in it. No. You find that like the 31s, maybe the high 30s, like 30,950 or something, right? And you put your take profit up in this area here and you get out before everyone else. Forget that idea of maximizing profits, right? People ask me all the time, well, how do I get the most out of it? You failed if that's the question you're asking me. The question you should be asking me is, how do I maximize my probability of getting out profitable? Not how much profit. You want to maximize your probability of coming out green. It's not the green, the amount of green. That's greed. Okay. So it's a mindset thing. So anyway, even if it breaks out further, who cares? If you're green, you take your profit as long as that profit was worth the risk that you took. That's the key thing. That's what you want to repeat over and over again. The hard part with swing trades is we don't get these opportunities very often, so it can be very frustrating. Now, meanwhile, there's a lot more action on the day trade time frame. So I can understand the allure and why people would rather learn to day trade than swing trade. But the reason why I emphasize swing trades over day trades is because you need to learn these concepts on the bigger picture first. Then you can apply them to the smaller picture. It's not like an overnight thing. You need to understand the psychological nature of the market, and you need to be able to assign probabilities to levels. And then once you can do that, you'll have more of a sense of context and magnitude. If you can't do that, you have no business putting on day trades, because all you're going to do is run into confusion and problems, and you're going to get caught in stuff. And then you're going to say, oh, I'm not going to use my stops because it always comes back for me anyway, until it doesn't. So that's why I emphasize swing trades. Be patient, learn the bigger picture first. You're not going to make a whole lot of money on it, especially if you have a small account. But the idea is to first get a sense of how to weight levels, how to judge trend properly. People think that they learn how to judge a trend in like one day. Oh yeah, the RSI told me, the moving average told me what the trend was. Wrong. There are magnitudes of trend, and if you can't separate them, you're just wasting your time like a retail trader normally does. So anyway, I know I say some things like that, some harsh things, but again, it is my goal to help you, if anything, protect your capital. Okay. I don't want, I've been in your shoes. I've been in this game a very long time. I know the deception, the deceptive nature of this business. And I see where everyone gets it wrong. And I got it wrong like that too for a very long time. I tell people I try to steer them the right way, but most people just don't want to be steered. They'd rather be lied to. Like I tell people all the time, people would rather spend $1,000 that they don't have on a dream, just a complete dream of riches. I'm going to be rich in 3 months, right? They would rather spend $1,000 on that idea, which is completely false, rather than $300 on something that's going to help them protect their capital and avoid all of these would-be stop outs in the future, because you're going to have them. All right, I can tell you, based on how long you've been in this game, I can tell you what the next couple of years are going to look like for you. All right, because I've been there many times. Anyway, all right, so are we clear on Bitcoin? So the points that I want to basically summarize here are: you want to day trade more than swing trade in this time, in this environment. If you're too new and maybe that's advanced for you, then paper trade. Paper trade the day trades and get some of those errors out of your system. I understand some people, the argument against paper trades is, well, there's no real money in the game, so it doesn't count. Well, you need to be intimately familiar with your system first of all. And you need to know everything that can go wrong with it, whether you make money or not. So in the beginning, you should paper trade, and you should paper trade a lot. And don't get upset if you make money there. Oh, that could have been real. If you're all caught up in that, then you got emotional problems, and you're only going to set yourself up for failure. I can't help you there. I'm telling you what works. Okay. Take this time to paper trade. You're not going to miss anything, because what's going to happen is you may think you're onto something, and then you give all the money back. If it's on paper, be like, all right, well, something's obviously wrong here. Let me go back to, step one again and start over again. Right? Or you can ask me, what's going on here? And that's what I do. I help people see the truth in this situation, in these markets. Anyway, so that is what the first thing I tell you: paper trade or day trade, and trade small and wait. Just wait for these opportune levels. If you're thinking bigger picture, if you want a broader move, then that means you want to swing trade. If you want to swing trade, you must know your levels in advance. All right. And usually it takes a long time before these things. I mean, look, I've had this level drawn in this chart for like 2 weeks or whatever, and it's still not in there. So I don't care. I day trade. I can day trade. I day trade other markets. Okay. My managed account, I've been working on the euro and the pound, because there's been some action there on the day trade time frame. I don't talk about that a whole lot, but that's what I do. All right. Anyway, so that's that part. If you're unsure, just stay out. Okay, so your three choices are day trade, trade small, stay out, okay, or just wait for swing trade opportunities and be patient. And either way, you should be working with small size, even if you have a large account, because like I said before, in this seasonal time, this is a bad time to be aggressive. This is a particularly a bad time to invest, in my opinion. All right. And let's segue from there. Let me know if you guys have any questions about Bitcoin before I move along. Okay. So one thing I want to point out to you guys, because a lot of people, if you're new to my stream, again, welcome. I used to talk about this a lot before. I've been focusing on it less in recent times because a lot of people just don't care. And I am trying to produce content that people do want to watch, but this is something you should care about. This is the bond market, right? The 10-year note. And this right here, this movement on the 10-year note is a result of the CPI report that we had a week ago. And this can be confusing. Like, oh, the bond market's rallying. That's a good thing. Rates are going lower. The bond market is not rallying. The bond market is still inside of this range. The stock market has become accustomed to this range. Now, I've been warning about if it breaks the support, we're going to have problems. Well, we never broke the support. Came right back inside. Keep in mind, this is good for regional banks. This is good for everyone that's got long these bond positions that the Federal Reserve and the U.S. Treasury is trying to protect, right? That's conspiracy theory. But I'm just saying, we're basically going nowhere in the bond market. Look where the prices are right now, okay? Bond prices. Look where we are, right? Basically in the middle of the range. So there's nothing going on there. We can't make any judgments about that. Really can't. So if anything, because we had that CPI move, that's certainly going to hold the markets up in this what I believe is a very it's a very manipulated or very what's the word I'm looking for? Engineered move by the U.S. government. So let's just take a look at the flip side of this, which is the U.S. 10 yield, right? Which is the yield, because prices, obviously bond prices and yields are inverse. So just look at the yield. These are interest rates, right? Based on the 10-year note. Look at where rates were, right? We tried to push this level here on rates and we turned right around. You see that? So here's why I'm pointing this out. Because if the market works its way through that resistance and we start to see higher rates, which is what the market does not want to see, that's probably where you're going to see the bearish action start to set in. It takes some time. It's not a one-to-one thing. It takes some time. So please keep that in mind. Keep an eye on the bond market. All right. Sorry. So let me start answering your questions now. Let me see what you guys have for me. All right. And again, I appreciate all your questions. I'm going to start over here on TradingView since I haven't seen you guys. Hey, Milad, how are you? Milad, my one viewer from New York. All right, let's see. I got Rowan from UK. Oh dear, I have another Londoner over here. It's my British accent. Okay, can you look at XRP? Sure, looks like a lot of momentum. Also, see my one New Yorker, and he's the only New Yorker that likes me, because New Yorkers usually don't like me. All right. Anyway, let's take a look at XRP. One of these days, I want to get some of those TradingView people over to. I'd love to have like a thing with them. So I'll let you know. I definitely haven't forgotten. Trust me, I haven't forgotten. I haven't been to the city since that time. So believe me, I will let you know. That was cool. So here's XRP. Right. Check this thing out. So obviously this was the SEC news that came out, a week ago or whatever, and got a lot of people excited, right? And all the new altcoins are going to be blah, 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 right? All the hype on YouTube and all the other nonsense. I hope you're not getting fooled by that. Anyway, so yes, this is a news move. So when you see a move like this, I mean, clearly you cleared right through those resistances, right? Now everyone thinks XRP is like the next big thing again. Well, let's take a look at the weekly chart. It's the first thing you should do. All right, now here's the weekly chart on XRP. Now look at today's. Look at how the week closed out. This is not a bearish pin bar because, look at the open to the close. But that tail is not exactly something you want to see either. But we're not going to make a harsh judgment on it. Current candle, the candle is just open. It's a new week. You have to see how this thing closes. So here's how I would treat something like XRP. First thing, you want to know the levels, right? Because it's cleared some resistance levels. Now, keep in mind, this was a regulatory play, right? Because I guess the SEC's argument was whatever, they whatever, but I don't know the exact outcome. All I know is it was good for XRP. So you want to look at these levels, okay? And these are basically the main levels you want to look at. What a coincidence, right? Look at this. Look how many times here. I'm going to draw another line and connect these over here. Look at this zone, and this is why you should always look at the weekly chart. Look at this. Look at this zone. Do you think that that's a coincidence that the tail on that weekly candle happened to form inside that zone? If you knew this in advance, which you could have if you knew what to look at on your chart, because that information is here, and you saw the selling develop in there, or if you were long from a lower price and this thing pushed into there, you at least would have had a good idea that maybe I should sell here. Maybe I should take some profit here or something, because we are in the middle of a big resistance zone, right? Anyway, so that's a key area. What is that price area? 76 cents is the low, and the high is like 87 cents. So, I mean, you could round that to like, 76 and 90 if you want, but this is going to be your resistance zone. All right. That's going to be your new resistance zone in play. If you're long at a lower price and price starts to push through there, that's where you should be considering taking profits, especially if you're involved in a swing trade. Now, as far as investing, people are probably thinking now would be a good time to invest. No, this is not a good time to invest. All of these coins, I don't care what the story is with XRP, all of these coins are highly speculative. They are not investment grade assets. So as we looked at with interest rates, that's a key factor when it comes to investment grade assets. We need cheap money. We don't have it yet. Okay. That's when you want to be invested. So the thing is, you want to invest at better prices, not at highs, because we're just not in a supportive environment. So my point is this with XRP, your next support is, what is this? 38. Let me see. I can't read the number. I'm sorry, 58 cents. That's this area right here. So you could round that 58, 59, 60, that area right here. So any retrace into that, I mean, right now it's at 73 cents. Any pullback into there at least may offer a swing trade opportunity. If you're looking to invest, I would say that would be a good place to begin accumulating some, but that I'm not even going to get into all the details on that. You really do have to have a detailed plan of how you plan to average into something like that. Keep in mind, we had a conversation about this in the active investor chat. When you are investing in an altcoin, if you're going to average into it, because a lot of people, oh, it's a great idea to dollar cost average. Realize one important thing about these coins. They can go to zero. These are not investment grade assets. This is not Google. Okay. Google, chances are, is not going to go to zero anytime soon. Neither is Amazon. Neither is Microsoft, right? Those are investment grade assets. This is a speculative coin. It can go to zero. Like Bitcoin, for example. Now, Bitcoin, I would say, is the best of the entire space. It's the leader, of course. It's the first one. Bitcoin can push lower than anyone may expect. Like, I know 5K sounds like ridiculous, and it's not a forecast that I'm making. I think it's a low probability, but it can happen. So that's why you don't want to get into one of these, oh, I'm sure this will be this will be okay. It's a good coin, blah, blah. Don't get into that mindset. That's all I'm saying. All right, so I gave you the levels on XRP. You should know what to do with something like this now. Again, I would treat this I would look at this more for swing trades or investing, not really day trade. Although I'm sure there's a lot of action on the smaller time frames. I would imagine this could be for some people who have the patience to watch it on the day trade time frame. I don't know. I don't day trade this thing. All right, does that make sense? So good question on XRP, and thanks for bringing it up because I know there's been a lot of hype on this thing. All right. Again, people, if you like my stream, press the like button. Please subscribe to my YouTube channel. Press the boost button on TradingView, and that's very helpful for me. All right, let's move along to the next question here. So I think Steen asked me a while ago. All right, Bitcoin testing support several times. All right, so I covered that pretty much in my speech that I went over about Bitcoin. So I think I answered your question. Hey, Armin, how are you? Nima. Okay, so comp USDT. All right, let's take a look. Comp USDT. What is that? Oh, okay. So let's see here. Let's go to the weekly. First thing I do, check the weekly chart. This may have something to do with XRP. I don't know. I'm not familiar with this coin. First thing you want to look at is general trend and levels. Okay. There's a lot of information with general trend and levels that people just don't appreciate. And it's one of the first things I teach people. And they're like, oh, this is easy. This is baby nonsense. Well, it's how I base a lot of trades on. So general trend and levels. This general trend is not exactly bullish. Okay. I mean, look where it's coming from. So, and whenever we're dealing with altcoins, we always have to keep the perspective of the bond market in mind. So bond market is not exactly supportive. The bond market can take months before it becomes supportive of these things. So that means one important thing: do not buy highs. Okay. You've pushed the resistance. That's certainly not a bearish sign, but the general trend is bearish, right? Now, we've recently broke this resistance, but look at this level here, right? It's an old support level, which now appears to be somewhat resistant. So that's your next level. So if you're involved in any swing trades, That's where you would measure profit potential from, somewhere in there. That's a place where you'd be exiting, taking something off the table, and letting the mindless sheep take that off your hands. That's where you would do something like that if it were to get there, assuming there was a buy signal. Otherwise, buying in this area is a bad idea. Okay, the risk is very high. So that's your resistance. You have a support. You have an old resistance, new support, which isn't too far away. What is this here? 65.84, this area here. That's kind of a tight support, right? It's the range high. So that may offer some potential swing trade opportunity. But outside of that, you're looking at this level here. Okay, if it retests that level. And that's what is that, 35? Let me see. What's that number again? 35.51, this area here. So I just laid out the levels for you. All right. It's just going to depend on what type of trade, what type of action, or what type of risk you're willing to take at when one of those levels, or if one of those levels is reached. If the support is never touched and it keeps going, well, don't chase this thing, because there's also the possible scenarios where it breaks out. I think this is a very unlikely scenario, but it's one that you should just be cognizant of. And then it pulls back to this old resistance, which is now becomes a support. You may have a situation like that, but that's not, I think that's like the least likely of all the scenarios I just showed you here. All right. And again, it's not that I'm some kind of pessimist on these things. It's just, I'm a realist. Look at the bond market. That recent pop, a lot of times it was news driven. And if that had something to do with XRP, then that's just like a flavor of the moment nonsense kind of thing. Don't get fooled by that. Wait for support levels, all right, especially in an unfavorable environment. So good question. All right, let me move along. Okay, so let me see what we have here. That was comp. All right, let me jump over here back to TradingView. All right. Oh, so Steen, where's that Matic trade? Did you put the Matic trade in here? This might be a good time. There it is. Okay, let me show you guys something real quick. All right, for you guys who stick around, this is the reward for you guys who stick around for my stream. All right, because those who cut out early, you missed like the best part. See this trade right here that Steen shared? This right here is a trade from the trade scanner, like I talked about before. This is the exact text that it produces. This is the notification. All right, it says bullish momentum reversal, coins, Matic, and it gives you a price and a timestamp, okay, which was today. Look for long setups on 1 hour or 4 hour time, or one hour time frame or greater. So let's just pull up Matic real quick and let's see what this thing is talking about. All right, so let's go Matic USD. It doesn't matter if it's USD or USDT. It doesn't matter. The general pricing is the same. This is the 1 hour chart, but this is the 1 week chart. But when you're using the trade scanner, you really want to go straight to the 4 hour chart. Okay, that's where you should start. And let's just make this chart big. Here we go. So this thing is calling Matic long. You see that? And this makes sense. Does this not make sense? Look, this Matic move here probably had something to do with XRP as well. You have a pullback. You have bullish pin bars. So contextually, it makes sense. Look at it's a previous level. Look where we are. It was a resistance level, right? So it's now likely to act as a support. So you have all that going for you. The next thing, when you see all that, you say, okay, this kind of looks like a sensible trade. Then what do you do from here? I have to actually do some more training on this because people still don't understand this. And it just surprises me as to why. Maybe things are just not as clear. Or sometimes, when like you've seen it so much, you're so advanced that it's hard for you to see things through the eyes of someone who's new. Anyway, this is where we would pull up the ATR. And I've talked about this in previous streams. You could find it on my YouTube channel. And we want to see the ATR number on the 4 hour time frame, which right now is 0223. So it's basically 2.25 cents, right now. We can round that. We should round that like a little higher, maybe something that's easy. We can round it to like maybe 2.5, even 3 cents, which is a little high. But you want to round higher so that you have more room to play with. Once you know that number, then it's just a matter of looking at your entry price, which, what was the entry price from the scanner? $77.98. Right now we're at $77.05. So this thing is actually giving you a better price than when the scanner called it. All right. So, but let's be fair, and let's say we took the trade at $77.98. Let's put that on here. Where is $77.98? I'm going to just mark that on the chart. All right. So basically 78. This is $77.98 right here. Okay. Let's remove this. That's where the trade scanner made the call right there. So sometimes, you'll get a better price but let's just assume you took it at the entry price. At this time of entry, this is where your stop and take profit. In fact, before you take the entry, before you enter the market, your stop and take profit should be calculated. If you're not doing that, you're doing this wrong, especially for these trades, because again, momentum is very temporary. It's a temporary inefficiency that we're looking to capitalize on here. So the question is now, how do we use the formula? Well, we're on the 4-hour chart. Again, step one, we're on a 4-hour chart. We're thinking now day trade mentality, right? We're not expecting a lot from this. I can even go to a smaller time frame. We can use a 1 hour, but we're going to work with the 4-hour just to keep things from getting confusing. We're going to multiply the ATR value, right? It was 22, it's 0223. If you want to take that number straight, you can do that, okay? But I'm going to round the number just for mathematical purposes to make this easier. I'm going to round it to 3 cents, 3 even, okay? And then I'm going to multiply that number times 2. That gives us what? 6, right? So if I take that current price and go 6 cents lower, how much is that? 77.90. So it's going to be like, so basically 78. So that means the stop would be like around 72. Right around here. Okay. That is the ATR. I round the ATR and I multiply it by 2. That gives me the instant stop loss order there. You say, why would you put it there? You should put it right here. I can put it there, but the chances of getting stopped out here are much higher. Okay. So now where do I put the take profit? Well, I multiply that number, that ATR number that I came up with, which is 3 cents. I multiply it by 3 for my take profit. So that's 9, right? That's 9 cents. So let me see. What is 78 basically plus 9? What is that? 85? So let's see. Where is that on here? That's around here. Okay. That's around here. And look, that's not higher than this area here. So there's a decent possibility of reaching that. That is your order. And this is, you've figured all of this out before you even get into the trade. So now you know your stop loss and you know your take profit. That is a 1.5 to 1 reward risk. Now, here's the other thing, again, that you should know. If this thing starts to work its way higher and you're in this thing and it goes to 1-to-1 reward risk, that's a good time to move your stop to break even. You may get stopped out for break even, but there's nothing wrong with that because you've mitigated your risk. You can have 9 break even stop outs and trade number 10 is a winner and you're ahead. Okay. So keep that in mind. 1-to-1 is a good time to turn it. Because a lot of times I see these trades, they pop up a bit, right? And then they turn around and they go right to the stop. That happens. It's momentum is temporary. But that, what I just showed you here is how you would work with Matic in terms of the setup. Now, one other thing with Matic is you do need to keep an eye on Bitcoin. All right. Because again, Matic does not trade on its own. So you want to judge Bitcoin. Bitcoin is pulling back into the support area. And if, like I said, if we get that buy signal on Bitcoin, that should be a good sign for that Matic trade. You have to look at that relative relationship. If Bitcoin completely breaks this support, that Matic trade is probably not going to work out. All right. Does that make sense, you guys? So, Steen, thank you for sharing that in the channel. I mean, people want to learn how to make money. They want to learn how to trade, but then they don't want to stick around for like that type of instruction. That right there, I just showed you how to use a trade scanner. I know that's a lot of work for some people, but man, the hardest part of that job was done by the robot. All you have to do is come up with the orders. Now I am working on an idea to maybe make it a little more automatic for you, but what else can I do? All right, you guys. So anyway, that was that one. Thank you, Steen, for sharing that. Can you look at SOL? Okay, so Johan, sure. USD, Euro, Armand. Okay, I'm just looking at some of the questions here. Let me see. I have some more time, so I can do that. Let's take a look here. What do I have over here on TradingView? Greed is powerful. I saw this one. Everyone was calling BTC to. Oh yeah, well, noob, of course. I remember. I recall seeing morons on YouTube saying Bitcoin had a 70% chance of going to 90,000. It went straight to 15,000, right, over the next year. So it just goes to show how the herd mentality works. That's what that is. You do not want to follow what you see publicly. Your sarcasm, Okay, I'm cool. I'm glad you appreciate that. All right, I'm just going back on TradingView here. Let me just say, I know I missed a bunch of things. People, if I missed your questions, I apologize. I'm just trying to get through these. I stream every Monday at 3 p.m. Eastern time. So if I miss your question, please come back and ask, or come to my Discord community. You can ask me there, and I'm happy to answer questions. All right, Steve, how are you? What are your thoughts on CCL stock going out 6 months to a year? Okay. Oh, cool. Thanks, Steve, for pressing the boost button. Let's go to CCL stock real quick. CCL, right? And you want us to look back 6 months to a year. Now, keep in mind, let's take a look at the weekly chart. The stock market is in ridiculous mode, right? So, Carnival. Okay. So, yeah, I remember when this, yeah. All right. So let's just focus on the technicals here. You are now back at this resistance area, right? So this is really not the time. If you're buying this thing now, all the people that bought it here and stayed in it, now you're just you're making them rich, right? You don't want to be getting into this thing now. If you want to get involved in this stock, wait for supports. This is your support level right here. You may have to wait some time for this. So when you want to know 6 months to a year out, first of all, you can't, doing analysis on a chart is really, we can spot levels here, right? Levels that may be relevant in 6 months to a year. Like we can talk about these levels and stuff like that. But as far as how this thing will get there or behave, there's no way to know. Markets are mostly random. If the S&P and NASDAQ pull back, which they're way overdue for, this thing is likely to pull back too. So at least, over the next 3 months, 5 months, I would be waiting for support if you're looking to get involved in this. If otherwise, work on the day trade time frame if you must get involved. I don't know. I don't like stocks at these levels. I don't like stocks. Just period. I don't like stocks unless you're working on very small time frames. Let's just go to the daily time frame here. I mean, so this may be like a swing trade pullback that you're dealing with. I can understand why this may have your attention because a buy signal is developing here. I just wouldn't expect a whole lot out of it, right? So yesterday's high or Friday's high was 1794. This thing closed at 1774. This thing closes or takes out that high tomorrow or today's high. What is that? Today's high is 1798. As you can see, there was a little resistance there. Takes it out tomorrow. Maybe you have a little room to play with here as a swing trade, but you have to make sure it's worth your risk. Do not get caught in something like this. If you put on a swing trade, respect the stop, because again, this looks like a nice pullback to buy. But when we take a look at something like the S&P, I mean, that's probably more like in line with the Dow. I mean, look at the S&P. Look at this. This is ridiculous, especially in light of all the economics, all the economic stuff that we've been dealing with since April. This is just very suspect to me. It's strong. I don't want to get in its way. I'm not going to sit here and call shorts. Okay. In fact, the trade scanner in the stock channel called the whole wall of shorts based on Friday's bearish candle, the bearish pin bar. I saw a whole wall of shorts. I'm like, okay, that makes sense, but this is not a bearish trend. Whenever you deal with a stock, you have to look at the parent index. Even if that stock isn't part of that index, the main index, S&P, NASDAQ, Dow, Russell 2000, you want to look at them. And you want to see, the trend on these things is clearly bullish, and we're clearly at cycle highs. So you have to process that and look at that in light of the stock that you're looking to work with. I would be very careful shorting stocks, because look at today's action, right? If you were all aggressive and you're like, S&P is going to pull back on Monday, I can feel it because look at this bearish pin bar. These are high probability, blah, blah, blah. Yeah, well, today, green candle took out the high of Friday. That's not how a bearish pin bar should unfold. Okay, so people got caught in that one, not me. Anyway, so that's how you have to treat something like that. So I hope that answers your question. Thank you for asking me. All right, let me just move along. Let me see what other questions I can answer here. All right. Okay. Hold on. All right, QNT. Curious to know your thoughts. Is that QNT? Yeah, it's QNT. All right, let me just look over here real quick. Let me see. Disney. Man, all right. Talk about mainstream. All right, hold on. Let me just read. Let me see what else I got here. Quantum. Okay. Well, you put a question mark in there. Let's see. Have you asked a question and have I missed it? I don't see anyway. All right, let's see. If the stream goes offline or blank, just refresh. Oh, okay. Yeah, that happens on TradingView. Thanks for pointing that out. Okay, yeah, just got to refresh. Just got to refresh. Ethereum. Okay, Debbie from New Zealand. Oh, wow. Talk about far. Okay, welcome. I can't do a New Zealand accent, so I'm gonna have to do my Australian one instead, since they're your neighbor. Hello, mate. I'm your mate from Australia. Your neighbor from New Zealand. Okay, that's all I'm gonna do. You're not Australian, I know. All right, I'm in CCL long-term hold. I was going to hold it to 37.50. All right. Okay. All right. So I hope that gives you some idea. You're in for, hopefully you're in from much lower. You said what? You're in from 37.50. Hold it to 37.50. Okay. All right. Let me go. Let me just jump back here. I know I had a bunch of other questions. I'm going to try to catch up on some of these here real quick. Hey, Levant, how are you? Disney. All right. So let me jump onto that one real quick. Now, keep something in mind with a stock like this. Hold on. Okay. This is typically a market stock, right? So obviously, this is not behaving with the rest of the market. I mean, look at this. Wow. This is a weekly chart. And you're starting to test important support levels. This is interesting. I mean, because they are certainly not a garbage company for the most part, business-wise. Never mind the political opinions on this thing. But here's the thing. And they may be affected by some of their bad decisions that they've made recently. You are at a support level. Okay, a pretty important support level. How much is this thing? $85. Now, so I can understand why there may be some interest in this. I mean, if there's any investing, yeah, I can understand. But right now, you are dealing with very bearish momentum. So I wouldn't just step in front of this thing. For one, you are at a level of interest. Wait for some type of reversal. If you're thinking swing trade, if you're thinking as an investor and you want to hold on to this thing for a number of years, then this is what I would suggest. Small bites, okay? Buy one share, buy 3 shares, whatever, and have an investment plan in place for how many shares you're going to accumulate, and do it by time, every, half of the month or the first of the month, and you can average in that way. I mean, I would not expect this company to go to zero, although they're probably dealing with some political stuff here, and who knows what else. So you are at a level of support. So technically speaking, you are at a level of support, but you do not have a reversal in play, right? Which means this momentum may continue lower. This is particularly a bad sign when the S&P is pushing highs. This thing should be at least showing some sort of bullish pin bar or something. It's closed on its low. Bad sign. If the S&P pulls back, that means this thing is more likely to outperform on the bear side. That's why be very cautious with this if you're going to get involved. But I can understand why you might look at them. All right, so thanks for asking. Good example of something that's relatively weak. Okay, let me see. What else do I got here? I'm jumping back real quick. All right. Hey, Phil from Brisbane. Hey, dear. Another Australian. Hello, mate. Okay, my mate's from Australia. Man, it's got to be like 4:30 over there. You're nuts, mate. All right, enough. No more Australian accent. I'm done with that. Okay. All right. Oh, nice, Milad. Okay, I'm just going back here. Brisbane. Okay, so Litecoin. Let's take a look. All right, I'm going to have to wrap this up here in a moment, but I'll do Litecoin real quick. Phil's a member. So Litecoin. Now, Litecoin, keep in mind, Litecoin is going to be a follower of Bitcoin typically. You have a nice pullback here. In fact, I think the trade scanner may have called this long a couple of times. Here's the thing. No, they may have stopped out too. Here's the thing. You have this old resistance right here, okay? And price is now entertaining that resistance. Not only that, but look at the kind of candle that we have here today. It's a bullish pin bar, right? Now, obviously, the candle is still open, but if it closes like that, I mean, you have a possible setup here in a location that makes sense. Not only that, Phil, but this is a failed low, okay? So you have a lot of things lined up over here. For the long side. What you want to see for something like this, again, you don't just step in front of it. For a swing trade, this may make sense. You wait for the high of this pin bar to get taken out, which is what, 93.64? That would become your entry price. Then you can use, if you want, you can use the ATR, right? What is the ATR on this thing? 588. So you could just round that straight to 6 and then do your math from there to figure out your stop and your take profit without having to do a lot of work. on that, right? Or if you want to figure out your stop and take profit another way. But this is setting up. I mean, it's certainly something to watch closely for a swing trade long. I like it. Okay, I like the idea. I'm going to have to check the scanner and see if that it's even a possibility for a long on the scanner. It may be. All right, so cool. Thanks for asking. All right, you guys, listen. If I missed your question again, I apologize. Do me a favor, press the like button, press the boost button on TradingView if you haven't. Join my YouTube channel, subscribe to it, because I have a lot of good stuff on the way. I really do want to see you succeed. I want to see you protect yourself. Okay, that's the key. Focus on that. Forget all this nonsense with this money and everyone's making billions of dollars and everyone drives a Lamborghini. That's all fake. If you haven't figured that out yet, I'm sorry. I don't know what to tell you. But your number one priority, especially if you're newer, is to protect your capital first. It takes some time to learn how this game works, and you have to basically forget everything you think you know, and you really have to consider the market from the market's point of view. Okay, a market-centric point of view. It's very passive. It's not assertive at all. It's very passive, and you have to have that kind of open mind, and that's really what I hope to teach people. So anyway, I have more content, more of like on the thought process and stuff like that. I'm working on some stuff to really help give perspective in that area, something that's very lacking in this business because everyone's busy talking about charts and oscillators and all kinds of other nonsense. Anyway, all right, you guys. So check the links in the description, join my Discord community for free. Check this trade scanner link. Let me know if you have any questions. You can reach out to me at mark@markpremarkets.com. You can reach out to me privately in the community. I'm happy to answer your questions. Okay. So again, everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.